Welcome everyone who's watching this video series with us. My name is James Mitchell. I'm with the University of Arkansas. I'm joined by Josh Maples at Mississippi State University and Kenny Burdine with the University of Kentucky. So the three of us make up the Cattle Market Notes weekly team. As a group, we've been writing this newsletter now for probably close to 4 or 5 months. And we were talking last week that it might be a good idea for us to record something, put something together for us to kind of give our general thoughts on what we've seen so far in 2021 and kind of what we think we'll see for the remainder of the year. So I'm going to tackle supply. Josh will follow up with demand, and then we left Kenny the hard part of putting all that together for us and giving us some outlook for what prices might be for the remainder of this year. So to jump right in, then I thought maybe the easiest spot to start with supply is to look at weekly federally inspected beef production. So this graph gives us weekly beef production in the United States, million pounds here on the vertical axis. This table gives us an annual picture of what beef productions look like the past couple of years. And so looking at this table, the one thing I want us all to notice is that year over year, we've been adding more and more beef to the system. In general, what we think is that that's stopped, and we're expected to be down 1.2%. So that's according to LMIC forecast, which is a group that the three of us work with real closely. They do a great job giving us a whole bunch of good material to bring to you guys. And so if we're expected to be down 1.2%, the question is, okay, so how do we get there? We look at this graph that's given us weekly production. This solid blue line is for 2021. Dotted blue line is 2020, and then this red line is the 5-year average. You can see that coming into the year, we were producing quite a bit of beef in the U.S. We saw this sharp decline here, and I don't want to hang our hats on, meaning that we've already started to see some reductions in beef production. If we all just go back to last week, we just got out of a crazy winter mess that hit a huge part of the United States past couple of weeks. So a lot of this downward we've seen in beef production is predominantly been driven by just that, right? So roads were terrible, trucks were stranded, it was hard to get deliveries, it was hard to get people into work. So all that together is gonna show up in the data and show us why production's down in recent. I don't think we're there yet, so I think a lot of these reductions in beef production for the year are gonna really come out second half of the year. We've got quite a few cattle to actually get through before we can start seeing some pretty steady declines in production. I'll get to that shortly. So this is where we are now. The question is, how do we get to where we are in 2021 being down 1.2%? So the first part of that is, okay, so how many cattle do we have in the system currently? So last week we had the cattle on feed report come out, and it showed us that on feed inventories were up about 1.5% relative to where we were a year ago. So a lot of this that we're seeing in terms of inventories, this is really a carryover from what happened the latter half of 2020. So if you recall, a big part of COVID was that huge bottleneck we had in the system. And to kind of catch up and make up for that, we aggressively placed cattle on feed kind of the July through September time period. And then on top of that, those cattle, a lot of them were heavier, weighing over 700 pounds. So we've still got quite a few cattle on feed that we've got to get through our beef system before we can start seeing any noticeable declines in aggregate. That's part one of that story. Part two is dress rates, right? So part two of what happened last year was dress weights were just averaging crazy high because those cattle were placed on feed. They were held on feed for a long time in some cases because those processing plant disruptions. So that's where we are still this year, right? So this January time period, dress weights for steers are averaging 923 pounds. Just think about how big that is. And that's 19 pounds above 2020, right? And so the idea is once we work through these on-feed inventories, and hopefully we start to see these dress weights moderate, that's kind of step one in getting us to a place where overall production could be down, right? So that's part of that. With the cold weather that came in, that might actually kind of pick up the pace in terms of seeing reductions in dressed weights. We'll have to monitor and see what March and April do for us in terms of slaughter and dressed weights, but that's something to keep an eye out for sure. For my end, let's kind of back up and then see big picture what's going on. So this is the January cattle inventory report that came out in January, and it showed us that inventories for 2021, total cattle inventory, so this is measured in million head on the y-axis, we're down 0.2%, right? So that's overall inventories. Well, if you look at the calf crop numbers that they showed us, we saw some pretty big revisions to 2019 and 2020 for what our calf crops are. So those calf crops from 2019 and 2020, those are the calves that are going to be hitting our beef market kind of second half of 2021. So if we've got fewer number of head that were born 2019, 2020, then that just tells you right there that if you've got fewer number of head, we should have less beef, all else constant, right? So that's kind of where we are now and what I'm expecting us to see. The question is, what could change to where we might actually see more beef in 2021? Well, part one of that is if cow slaughter comes in a lot higher than we were expecting, right? So currently, beef cow slaughter is averaging just slightly above 2020, but we're not expecting that trend to persist through the year. But, in the near term, if cow slaughter picks up a bit, if that drought in the western part of the U.S. really stays with us, that could force some tough decisions for a lot of people. And in the near term, that could raise beef production slightly. The question is, are we actually going to realize that? But where we're standing currently is that we do expect to see less beef production in the U.S. So that's what I've got on the supply side. But I think it's important for us to remember, right, that we can have supply that's supportive of prices, but what you really need is to monitor demand, which is perhaps even harder to do. And so Josh is going to come in and give us a nice picture of what that's going to look like. Given all that information together, Kenny's going to put all that together for us and give us a good idea of what prices are going to do. So that's what I've got on the supply side. Thanks for tuning in.
Well, thanks, James. And can y'all hear me okay? All right, I'll see you over there. So, James, thanks for kicking us off there on the supply side. And I'm going to take it from here and dig a little bit deeper into what's going on with beef demand. Obviously, we're coming out of a really crazy year, really volatile year. And that's going to mess up our charts, our graphs that we show you throughout 2021, because we're going to be comparing it back to some really wild swings last year. That's evident here on the box beef cutout value. So when I'm talking about beef demand, we're really thinking about how much beef is moving through the system and the prices that it's moving at as kind of a guide or some information about what beef demand is going to look like this year. So if we look at the box beef cutout, we've actually seen some pretty good strength over the first month or two of 2021. It's hard to see here, but the blue line there is a 2021 box beef cutout value for choice carcasses. So we're looking at a decent increase over where we were relative to that dotted line in 2020. So we're probably not going to see the crazy swings that we had. You can see here in April and May we had the crazy spikes in the cutout value because of the COVID disruptions. But despite the fact that we're not looking for those really high values, we still have seen some pretty strong cutout values the first month or two of 2021, given the supplies that James just talked about. So this has been a supportive thing for cattle prices over the last couple of months. If we break it down a little bit more, instead of just thinking overall cutout value, and you break it out into the different primal values, this is where some of where the beef cuts we're familiar with come from. We can see that we've picked up quite a bit of strength in some of these too. So I've got this chart going back to the start of 2020. You can see there in April and May, like we talked about earlier, we had the big volatility in what the value of these different primals were. Steadied out a little bit throughout the middle of the year. We had a pretty big peak in the rib primal value around holiday time. But really, I want us to look at what's happened in 2021. And you can see that most of these primal values have picked up in the first couple of months of 2021, which is really setting the stage for some farther stronger cutout value that we've seen than we might have expected given the supplies that we have. The other piece I want to bring in quickly is what's happening with the export market. Our beef exports are another piece of the beef demand picture. Beef exports, like everything else, got rocked last year, and we saw them drop off sharply whenever the really high beef prices hit. But they regained strength quickly, and by the end of the year, we were above previous year levels in terms of exports. And if we think about this on an annual basis, 2020 was down a little bit in terms of total beef exports, but we're expecting 2021 to pick back up, given that things that have returned a little bit more normal. Speaking of normal, there's still challenges. Obviously, the food service sector is is not fully back. Restaurant goers are not back to normal beef consumption in restaurants. We're still moving a lot of beef through retail stores like grocery stores. Seeing what that recovery continues to look like through 2021 is going to be key, especially when we think about some of the particular cuts that come from beef. So, Kenny, with that, I kind of hopefully have gotten us a quick shot of what the demand picture is looking like, and I'll pass it off to you for some overall expectations.
Thanks, Josh. Appreciate it. Thanks to James as well. Looking forward to talking through some things here. And I'm going to kind of wrap things up and talk a bit about the overall outlook and so forth. And that's kind of going to be the plan. So I'm going to provide some perspective on where I think the market's going and just kind of some background on why. A few things I guess I would say first. Both James and Josh painted a picture that really was kind of an improving supply-demand picture. I think that's the first thing to understand, is that we're coming into this within a better fundamental situation. The way I've described it, it looks a little bit like 2021, maybe the 2020 we expected and would have gotten had it not been for COVID. And that's kind of one way to think about it. Feedstuffs remain a concern. And I've chosen to show you here a chart. This is Oklahoma corn price from LMIC. So this isn't future, this is spot corn price. So I want you to notice though where things were. Dotted line is 2020. So notice where corn price was about the end of summer in 2020. And notice where it is at the end of February in 2021. Had it not been for the pandemic and everything going on, I think we would have talked a whole lot more about this change in grain price and how it would impact livestock markets over the past 6 months or so. So that's obviously a challenge. Hits us in a couple of ways. It's a direct cost for some of our operations. If you're what I call a background or winter background, or you're operating on purchase feed and growing cattle that way, your costs obviously go up. All feedstuffs generally are going to follow the corn market. It doesn't matter what you feed. Corn bean meal will do this. If you're feeding commodities like soy hulls, gluten, distillers, grains, they're going to follow as well because they're really priced kind of on a substitute basis. It also, though, impacts the value of feeder cattle because it increases what it costs those feed yards to finish those cattle. And that always impacts what feeder cattle are worth when they actually move through these yards. Now, the other piece of the puzzle to keep in mind is that the demand for any animal that's used for beef production is a derived demand. So the demand for fed cattle is derived from beef demand. The demand for feeder cattle is derived from the demand for fed cattle. And the demand for calves really comes from the demand for heavy feeder cattle. So I always like to look at what the futures market is doing. Now, we're going to post this on March 1st. I'm showing you the futures prices from Thursday, February 25th at the settle. So basically where the market ended on Thursday, February 25th. What I want you to notice though, is go down here and look at fall. And we've got a fall feeder cattle futures market that's kind of been in the mid 150s, okay? So if I'm a stocker operator looking to buy some of these calves this spring and put them in a grazing program and sell them in the fall, I'm looking at those October, November contracts for some expectation of what the market's going to be like when I pull those cattle off of grass this fall. That's a pretty strong, frankly, fall feeder cattle price, based on what's seen the last couple of years. Kind of to put this in perspective, this CME feeder cattle futures contract, think about an 800-pound feeder steer out west. In the southeast, kind of where the three of us operate, that translates into a state average probably somewhere in the low to mid 140s. But for a lot of these groups, if you're moving groups of cattle in the southeast, you really ought to be $4 to $6 back of that, just the difference being transportation costs. So that's kind of the gross value expectation of these cattle that will be placed on grass this spring. Market like this, I can see a pretty significant run up. Also notice though, it's going to be the first time in a while that we've sold into a market with this much carry. And we use the term carry a lot in the grain market. It's kind of a storage term. What it really means though in the feeder cattle market is we're going to be selling into a market with the expectation of prices getting better in the future. Got March on the board at 140, April 145, May at 147, August at 154. In other words, a big expected run up in feeder cattle price between spring and summer. And summer is a typical peak for feeder cattle prices. So all that bodes well. So my best guess is we see the best spring calf market we've seen since 2016. And that's based largely on what I think we're going to see come fall based on those fall feeder cattle futures prices. I'm showing you a Kentucky price chart here, but this basic trend should hold across the region. Red line there is 2021. Now again, we're posting this on March 1st. So 2 weeks ago, very few cattle moved because of weather problems. Ice, snow, cold weather, just a tough week. Last week, even the first part of the week, things seemed fairly slow, but when I looked at sale reports for the second half of last week, I thought things were showing some improvement from even the week or two before that. I really think we can add a good 20 cents or more to the average price of some of these steer calves and heifer calves that are going to be placed on grass between now, the first part of March, and where I think they'll be about probably the middle part of April. And that's somewhat regional, right? Your calf market tends to peak with grass, and grass tends to come on at different times in different parts of the country. For Kentucky, it's usually somewhere between the first and middle part of April. The further south you are, the sooner that happens. Last thing I want to comment on, I do think there's a good chance that we see a pretty solid return to grazing programs this year. And the main reason for that is these higher feed prices. And what happens in the market when feed prices are high are two things. Number one, feed yards aren't as aggressively bidding on some of these lauder calves that we place into some of these grazing programs. So oftentimes those stocker operators who are buying calves to place on grass can get them bought a little bit cheaper because there's not as much competition from the feed yard sector because feed costs are higher. Okay? Whereas those grazing costs don't change near as much. At the same time, when feed costs are higher, what we tend to see is price slides narrow, meaning the difference between what cattle sell for by weight, let's say what 6 weights, 7 weights, and 8 weights sell for, that difference narrows. What that really does is that increases the value of gain. The pounds that we put on go up in value because it costs more to put them on the feed yards, which means we get better return to grazing programs. So despite the fact that I think we're going to see a pretty strong spring calf market, I do think the potential is there for a pretty good return to these summer stocker operations that place calves this spring and sell heavy feeders in the fall of 2021. So we'll wrap up with that. I'm going to leave you with this thought though. You probably saw this through our weekly Cattle Market Notes newsletter. If you didn't though, we would encourage you to sign up for that. If you get it by email or find it online, there's a link to sign up right there at the top. We would love for you to follow us that way. I know I speak for Josh, James, and myself when I say that we appreciate you listening and would definitely welcome you to reach out with questions and feedback. Thanks so much.